come here because this is home for me. Call us Dallas people, but I'm from South Park. And it's really, really good to be here. Very honored to have Robert and his wife have us here to present this information to you. Again, my name is Georgina Leah. I'm the Chief Financial Officer and General Manager at Truth Induced Financial, located in Dallas, Texas. My job is to introduce you to the company and give you a little information about Truth Induced, and then our owner and president is going to come up and give this information to you. So again, Truth Induced in Dallas, Texas, we like to do these presentations for several reasons. We have a mission. 12 years ago now, he came home and he was like, you know, I'm out here, I'm doing taxes, I want to help people, but my hands are tied. I can't advise, I can't do this, I can't do that. And at that point, Truth Induced was born. You know, we just decided that we could carry this on, the two of us, a whole lot better than his hands being tied at other places, working under other people. And so that's where our mission came in. Our mission is to induce truth back into business, one client at a time. And when we're invited to do presentations like this is exactly how we get that message out. And we have a philosophy that the most informed client gets the best refund. See, you can go in there and throw your stuff on the table, but you don't know what's happening. So if you have the information, it makes you powerful. It makes you demand a better preparation. And then we have a motto: proof is in the performance. And once you see this information and you put it into action, you'll understand that motto. And so without further ado, what I want to do is bring to the front of the room our owner, our president, my partner in life and business.
Hey, thank you. Man, first I want to say, first and foremost, thank y'all for coming out tonight. It's Wednesday throughout the week, and I have business owners out taking their business serious. That's important to me, and I appreciate that, first and foremost. I want to say that. Well, this is my topic today. What's your tax strategy? I see everybody watching these lines and feeds and seeing the money. And so, what's the money plan? Let's say you hit $1 million tomorrow. Do you know what you owe in taxes on $1 million? See, what you don't realize is $1 million is not $1 million. A dollar is not a dollar. And so it's only 65 cents, but you're going to go spend the entire dollar. And so I want you to understand you have to have a strategy for when the money plan happens. And so I want to go into a little more specifics about your industry. Well, let me give my disclaimer. Truth Induced is not associated with any company, nor will Truth Induced endorse, paid, or compensated any financial income to share the information within this presentation by another company. Truth Induced does not guarantee any strategy shown in this presentation, nor does Truth Induced participate in the advice through presentation with the intent to entice, persuade, or manipulate any individual toward a decision. I want to make sure we get the legality so you understand that my company and the company you saw are two different companies. This is a question that I love to ask across this country. Anytime I'm doing this presentation, I ask this question. So I want to pick on a couple of people. In your opinion, what's the difference between the rich, the poor, and the middle class? Share with me. You didn't think you were going to have to answer a question tonight. I didn't come in to answer no questions, right? But honestly, this is something we didn't grow up talking about at the dinner table. My parents didn't talk about this. We didn't talk about it in school. We paid for college and they didn't talk about it. And so I asked this question across the country. This is a great question so we can get to know each other. What do you think the difference between the rich, the poor, and the middle class is?
Their educational money?
Education and money. That's a good one.
Yeah, that's pretty much.
No, you can't drive with this. You got to get something different.
Mostly when you ask this question, it's talking about money.
Well, why is the poor then?
Mindset.
Yeah, they don't know.
They probably know, but they're not putting into action.
They're not applying.
They're not
okay,
applying.
I like that. You know, there is no wrong answer. You know, when you think about this question, it's all based on perception and what you have. I have a personal philosophy that people are only a product of their information. Doesn't matter your environment. If I can change your information, I can change your life, at least financially. And so I want to share with you my opinion on this. You know what the poor do? They just buy stuff. And they buy stuff and they buy stuff and how do they continue to buy stuff? But they poor.
They work.
You see, but they buy stuff. Nothing never comes in. You see, always going out. Nothing never comes in. It's a constant going out. What does the middle class do? They purchase liabilities and assume that they're assets. The new house, the new car. And then tell you in the background they created a mountain of debt. And if you hadn't heard before me, please know that credit is dead. Ronnie Lamb will be one of the first professionals to share with you if you have a great credit score, that means you're good at holding debt. And so I want you to understand that's not always the plan. But what do the rich do? They purchase assets. I want you to think about that. That's what the rich do. They purchase assets, but not any particular kind of asset. They purchase an asset that does three things. What I want you to do for me is Google the word assets. If you heard me do the call, if you saw us do the video before, I did this, and I do this every time. And I want you to Google the word assets. And I want you to look on that list and see how many things you own on that list. You see, there's actually a list of assets, and I want to know how many things you own on that list. And then you can see how the rich begin to move. And when you start to think about rich, these are the three things that the rich do when they purchase. They purchase something, an asset that has a first passive income, which would turn into a cash flow, a residual income. This is what they buy. I want you to think about the last thing you bought. Did it produce a passive income that turned into a cash flow, a residual income? You see, I want you to think about when you spend your money. I want to share with you as a professional the fastest way to rich is spending. And you don't even believe that because we weren't trained on that mind of thought financially. But passive income is no more than income being taxed at the lowest rate. Cash flow is money being deposited into your account and spent from that same account. This is what cash flow is. And residual income, in my opinion, is just money made with no effort, slow and sure. This is what they buy. Think about what you purchase. Does it do these three things? And so, who can be rich?
Me?
Anybody.
Why not you? You see, you said you, but why not you? Usually when I do this, very few people rate themselves in the rich category. And so I want you to understand it doesn't start financially. It's not a tangible thing. If anybody, why not you? Now, we're talking about business today. And so I'm going to pick on the business owners. Robert, you first.
Let's go.
Define business for me. We're in a business environment. We all business owners. Define that word for me. Should be easy.
Providing a service or tangible thing for somebody. I can't think of the word, but something tangible or providing a service for somebody else. A transfer of income for a service.
There you go. There you go. That's what I want you to understand. When you look at this definition, an activity of exchange with money or barter for goods or services. This is what I want you to understand. There must be an activity of exchange. If you're calling yourself a business owner, if you're not exchanging any activity, you are not in business. Please know that. I want you to understand that. We'll go into the specifics of that. This is the problem we have. Most people have a business and they have no business plan. When I was growing up, you had to have a business plan, then you had a business. Now you can have a business and not even think of a plan because you're following the system of that business. Please understand the system that you follow in a business is not a business plan. If you already attached to that system, and I see a lot of people reading their feeds and following the lines, that means you're following the system already. If you haven't set up a business plan, then you're on step 5, and Rodney's job is to bring you back to step 1. And so we want to share with you this evening, here's the solution. The solution is that a business plan requires so many parts of it. And I want you to understand that. Tonight we'll be specifically talking about the financial planning aspect of the business. And so we'll be going to that, specifically taxes, because I'm not the only financial professional that you'll probably end up speaking with. But let me give you a little bit about myself. I've been in this industry about 21 years. 14 of those years I've been blessed to be a professional, and now I'm going on my 13th year as the owner of Truth and News Incorporated. My education credentials stem from a Bachelor of Science in Humanities and a minor in Business Management. But I think it's more important to know my tax credentials, TaxWise University, SFS University. I'm a member of the National Association of Tax Professionals. I'm a permanent member with the Santa Barbara branch, that's important to know. But I am PTIN certified. But most important is that I am the EFIN holder for the tax firm, meaning that I own the firm and not just work there. And a few accolades I'm proud of. For the second year in a row, I've been voted the #1 tax pro in Dallas by PTIN.org. I gotta give him a round of applause. Hey. That's amongst 14,000 tax pros in my city. And so I'm proud to be the #1 reviewed tax pro in that city. Members of the association, I've just became a member of the American Society of Tax Problem Solvers, meaning that I can now put designation behind my name as a specialist. CTRS is Certified Tax Resolution Specialist. We are the people when you receive your letters and get audits. If you don't choose to go with a tax lawyer, we're the cheaper version of that. And for the last 10 years, I'm most proud of, we've had 0 financial complaints at our Better Business Bureau, and we have A+. And I'm very proud of that. Yeah, round of applause for that. We have 1,000+ clients in 32 states. It's only 50 states. And so they say for a decade, not one person complained. That's phenomenal. And so that's the one I'm most proud of, and that's why we make sure we let you know. Enough about me. Here's another question I love to ask across this country. What's the greatest expense you'll incur in your entire lifetime? Something you spend your money on.
Children.
Children.
Look at these parents just Look at these parents. Y'all love it. They'll pay you back later. You'll love it. You'll love it. Share with them. Bills. Just say bills. Think about it. Everywhere I go, this is what people say. Your home, your children, your education. I want you to understand your home is the one largest purchase, the biggest purchase you'll ever have in your entire lifetime. And this is the biggest purchase you'll ever have. And it's only a one-time purchase. Children, the never-ending expense. That'll never stop. And then education, if the Department of Education is hunting you with letters, most people scream education. When I come to college cities like Houston, this is a big answer here. But like the young lady said, these are the real bills in your life. This is why you scream these things out when I say, what's the greatest expense? But what I want you to think about, if you didn't know, taxes. Before you were born, taxes were paid on you. While you're here, you pay a slew of taxes. But did you understand and know that when you die, you have to file your taxes one more time? Even when you're dead, you owe taxes in America. And so we want you to understand, if you didn't know, taxes is the greatest expense you'll ever incur. So as a tax-paying citizen, your goal is to what? Lower their tax liability. And so what is your tax liability? Do you know what your tax liability is for business owners? Most people not even aware. You see, most people are just aware of the federal taxes owed, the IRS, the one time we pay for the year. Then if you're in a state tax, we're not like that in Texas, but even some people have state taxes, that's 2. But a lot of people run and get sales tax because we have products, that's 3. And now if you go and get your LLC or S Corp or higher, you have a franchise tax with the Secretary of State now. And if you happen to have employees, you're looking at every week or quarterly, you're paying payroll taxes. So in essence, the average person could end up filing 7 times a year instead of the one time we used to when you go into business. And so you need to understand as a business owner, what is your tax liability? You need to be aware of that so that you can be aware of what you have to be responsible for. And so this is the question I go across the country asking. And so I'm gonna pick on people. What's your tax strategy?
Well, I'm listening to you.
I like that. That's honest. Share with me.
I'm in the same boat.
Hey, no, y'all can't just
Look,
try on each other.
this woman here take care of all mine. So
Okay, so
we in
you
your
just-
hands now.
Okay, good deal. I'm gonna go with that. I'll let y'all make it. Share with me. What's your strategy? Are you with him? Okay, so everybody riding. This is what I mean. What do you do specifically to lower your tax liability? You see, we think about that. We need to understand you make a certain amount of money, you owe a certain amount of taxes in this country. But how do you lower that? What you may have not known is the system is 105 years old. They actually have laws to help us. But we're here today to talk about cryptocurrency and the IRS new laws. And, wow, okay. I want to bring up a couple of points for you, owners of crypto. Viewed as property, it is not currency to the IRS. You need to understand that and know that. It makes losses more difficult to write off, meaning losses on property are capped at $3,000. If you did not know that, if you are self-prepared in here this evening, do not take your business loss larger than $3,000 because you are capped at $3,000 and because it's treated as property. The point 2 I want you to know, capital assets are held for personal use that are sold at a loss, generally don't need to be reported, and the loss is not deductible. So I want you to understand these 2 points as we go through this, as we talk about cryptocurrency and how these new laws are affecting you. Question? Oh, okay, good deal. Now, virtual currency, these are the 3 must-knows that I want you to remember. If you are holding or purchase, if you purchase and hold, you do not have to report. I want you to understand that. If you purchase and hold, you do not have to report that. Now, if you sell at a profit or a loss or exchange, then you must report it. A lot of people telling y'all that it's an honor system and you don't have to report this income or / loss. Or exchange. I want you to understand it must be reported, and it is an honor system. But please know this is all digital. It is being tracked. And then if you cash out, you must report your profit or loss, and you will be taxed according to the length of time you have held the capital asset. You need to be aware of that. If you keep your investment for longer than a year, you are long-term investing. And you will be taxed as a long-term capital gain or / loss. And so these are the 3 must-knows that I want y'all to understand when you're dealing with virtual currency. Here's the fact that most people understand that the Roth rule, applies to stocks. A lot of people use the Roth rule. It will not apply to cryptocurrency because crypto is not a stock or a security. So please don't let anybody advise you in that manner and let you feel like that you'll be able to watch. You won't be able to do that as well. Record keeping is going to be key. Record keeping is going to be very key. Did you document the gain or profits correctly? That's what's going to be very vital for y'all this year. And so I'm glad I'm here early catching y'all to make y'all understand how important it is to keep up with that information. You must keep up with all of your gains and profits so you can make sure that your tax bracket is in. The gains you report are subject to income tax. I want you to know that. You are subject to income tax on your gains. However, your rate will depend on how long you hold or held the capital asset. And so I want y'all to understand that when you're out here investing, time of rate and how long you hold it is very important on how you'll be income taxed according to your profits. And because I want you to understand you will eventually profit. When you do profit, you must have a strategy for your profits. Now, here's the thing that I want you to know about these new laws. Just like they say it's viewed, remember it's viewed as property, and it does not qualify as dividend income because cryptocurrency is not a security. I want you to understand that it's not a stock or a security. And so that's as a personal ownership. And most of the time, this is claimed on the Schedule B or Schedule D. A lot of self-preparers do that, but this is what Rodney is suggesting. This is what I'm here this evening to let you know that business owners, if the business owns the investment, and you can deduct the investment-related fees and costs. You see, right now, a lot of y'all are personally owning these businesses. They are attached to your social. But as soon as we do and change it and put it on the Schedule C, now all of the fees and all of the costs of the investments are tax deductible in the name of business. Take the business out your name. I want you to remember this thing. I can't write anything off in the name of you, and I can write everything off in the name of business. And once you understand that, I want you to start moving as a business. Let your business own the investment, and you start personally owning the investment because it's not helping you when it comes to taxes. Now, I want to teach you about 2 tax systems. How do we actually turn ourselves into a business? A lot of us have a W-2 paying job. A lot of us are employees. You're taxed up to 12 times, few deductions, limited in your brackets, earning hurts your bracket. You're taxed on your income before you even earn it, and you have an expiration date of 20 years. After 20 years, they don't want you to work anymore. And business owners, you're taxed after business expenses, over 500 deductions. You can use all schedules. Earning is encouraged. Earnings are offset by your deductions, and your success date is your retirement. You pick that. And so I ask, which options is better? Business owner. Then why do 80% of our country choose to be an employee?
It's easy.
It's easy, right? It pays the bills. You say that a lot. I've heard a philosophy say wages pay the bills, and that's okay. But I want you to understand, this is why, in the case of an employee, what do they want to do? They want to lower this tax liability. Real bad. But what do business owners want? We just want more deductions. That's what business owners are looking for. And this is why I believe the home-based business is the best tax strategy ever. Because it not only lowers your tax liability, but it also increases deductions for you that you never knew you even had. And see, a lot of you have been operating on this side and don't even have an understanding of this side. And no one teaches this. How do you get this information? I'm sharing it with you tonight. Let me give you a few quotes. A tax is a compulsory payment for which no specific benefit is received. This is the U.S. Treasury's opinion of a tax. 2 words I want you to focus on. Compulsory payment. Why are we using words like that in the land of the free?
Most people don't understand it.
I want you to understand it's very expensive to live in this country. And it's not the land of the free, it's very expensive. The truth is that we have such a limited budget, such limited manpower to enforce the income tax laws and collect the revenue, that the only way we can keep them honest and paying their taxes is to keep them afraid. And they're talking about me and you when they say keeping them afraid, because the IRS actually applies fear tactic so that you will pay a tax. And even worse, now they even teamed up with some of these corporations in 8 weeks for $99, you can be doing taxes. And so they launch 1 million of them into the population, and all of y'all go in there and have a novice do your taxes who doesn't know anything about what we're sharing this evening. You get a raise every time you can legitimately avoid paying a tax on something. And this is from the CPA, Mr. George Brown. You see, Rodney's here not this evening to tell you tax evasion is illegal. Please do not think you can evade taxes. I want you to understand that. But I also share with you that tax avoidance is not illegal. It's not illegal. See, I want you to understand they have laws that have been around 105 years, written for you and I to avoid a tax. You just don't know them. And so I want to share a few of them with you this evening so you can have a better understanding of how to avoid taxes legally. I have a few deductions on the board right now, and these are everyday expenses the average person incurs. How many of these expenses are you currently incurring right now?
All of them.
It's not. Here's the magic question. How many did you write off in your taxes last year? See, if you didn't say all of them, every business owner is saying, why not? Why not? See, what I like to share with everybody, I have 1, 2, 3, it's 9 deductions on this board. This is the magic. You qualify for over 500 deductions. So there are 491 things not on this screen, but you think this is your entire life. And I can show you there are 491 more things you qualify for that you may have not known, that you can write off in the name of business. And so that's what I want you to understand. If you're the business owner, you're just thinking about a business. Did you know that's a deduction? If you're in here just thinking about a business right now, that's a tax deduction. Let me tell you how the law plays that so you can understand. None of this is my opinion. The tax law allows you a deduction for startup expenses. Think of it as the money you spend while you're thinking about and investigating the business. And if you're a business owner and you already have one business, then think about another business. I want you to understand multiple businesses are allowed. You can have more than one business. I'm a multiple business owner myself. And so here's some of the common startup expenses while you're thinking about it. Travel expenses driving here this evening and going back. Entertainment expenses to pick the brains of friends. Training. Cost incurred analyzing the market. Purchasing books and magazines. Definitely make sure you encourage yourself. Certain automobile expenses. Advertising fees for opening your business. A lot of these things can be incurred before you even a business owner. Now, this is the point I want you to leave with. While you can start accruing these expenses, as soon as you begin going into the business, you don't get the deduction until you officially begin the active business. And so as soon as you start the active business, that's when the deductions actually start to count for you. But this is the goal, to transition your everyday expenses and the tax deductible expenses legally. Because I want you to understand these laws are already written for you. There's not one person in this room that's 105 years old. And so those laws been around before you and I were born. What is the red flag? A red flag is a tax deduction or tax credit that bounces your return out the computer and invites an audit. Does that sound bad? Yes, by definition, it's not bad. You see, I want you to know there's only 4 instances that bring about a red flag. Expenses or credits not associated with your business, items of lavish or extravagant nature for personal or recreational use, large deductions out of line with the amount of income you are reporting, and abusive use of deductions or credits associated with your business. If you have not committed one of these 4 violations, you should not hear the words red flag come from your professional's mouth. That's just code for I don't know how to do your taxes. And just like the IRS, I scare you with fear tactic so that you will say, you know, Rodney, let's just leave it alone. I don't want to raise no red flags either. And that's your money. All because he didn't know how to do your taxes. And so I want you to understand, if you hear red flags, you should get all your information and go to somebody more qualified. Yes, ma'am.
What does the IRS consider abusive as far as the deductions? If you have a lot of deductions, like when does it cross that point to where it becomes abusive in their eyes?
It has to be ordinary or exclusive to your industry. And so, let's say you're in the industry, you can't just go buy a Rolls Royce because you feel like this is a good company vehicle for you. That's extravagant. That's going too far.
Right.
That doesn't fit your industry. Now, if your income fits that, then you can do that. If you hit millions, you can go get that company vehicle because people who make millions need to show that. And so it's kind of dependent on your financial area, where you are. And so you can kind of determine that based on, because some people, like we have here, I've been to some parties where they have lobster and shrimp. And so some people go overboard.
Right.
And when it doesn't require but fruit and water. And so, but sometimes you can really go extravagant and go overboard and go lavish with it. And usually it's the auditor. They'll look at the deductions and tell you whether or not they believe it's that. But if you have a good pro, we'll stop you before you even get to that point. We have a good understanding of that. I saw another hand. Good deal. What is an audit? An audit is the IRS looking to prove that the information on the return is accurate, the deduction is legal, and the income is honestly stated. Is that bad? Yes, ma'am. Is that bad? No, that's not bad by definition. So why are so many people afraid of an audit? Why? Why are we afraid of an audit? You know, there's such a stigma on this word that the IRS no longer does audits. The procedure now is called conducting examinations. They no longer do audits. And I share that because your tax pro should have shared that with you. You see, this is the one who you pay to do your taxes. And so this is the information you need to know. But let me give you some statistics. If you happen to make under $25,000, there's only a 1.2% chance that you'll be audited. Between 25 and 100, 2.5. 102, 4.7. 200,000 and up, just a 3.3% chance you'll be audited. And this is according to the small business taxes. This is 80 million business owners. So where are the audits? Where are the people getting in trouble from putting these businesses on their taxes? They're not there. I want you to understand. This is my philosophy. Audit is not a bad thing unless you're lying. You see? If you're not lying, what are we afraid for? Did you drive $500 in gas this year, maybe? Last year, I think? What? You Think about it. 500 is easy. We're gonna really write 500 off. But if we write 501 off, then we lie. And so if we audit it, me and you need to be afraid. And so as long as we're not lying, I want you to understand, you have no reason to be afraid. Here's the other myth about it. Is it fact or fiction? After 3 to 5 consecutive years of taking a business law, the IRS is going to audit you. True or false?
False.
False. Fiction. You see? Well, I want you to understand that you can actually take a business loss up to 22 years. You see, we see Trump move a loss, a billion-dollar loss up 18 years. Did you know you can do the same thing? That is not a Donald Trump rule. That is anybody that qualifies rule. And so I want you to understand, though, listen to those. When people tell you, I heard, or I was told, Rodney is the professional here today to share you in my industry, there are no gray areas. You either can or you can't. It's all black and white. It's all law. None of this is my opinion. If you can, it's written. If you can't, it's written. So you should not be told anything. You should be shown when it comes to taxes. So if I tell you you can do something, I'll show you you can do it. And if I tell you you can't do something, it's written that you can't do it. And so it's my encouragement this evening to ask y'all, the next time you hear tax myths, just ask them to show it to you. And that's how you'll run that individual off. Can you show me that? And so I want you to understand that's how it works in my industry. Here's a secret most W-2 employers don't want the employees to know about. And this is gonna be a big one this year when you're filing your taxes. Taxable income. This is gonna be the real key this year. Now, I got a lot of information on the board and I want y'all to follow me. Your AGI is your adjusted gross income. This is how much money you earn for the year. Let's say it's $40,000 before taxes. Last year, they would give you two deductions, the standard and the individual, and they would equal $10,400. That would leave you $29,600 of taxable income. This is the amount that Rodney uses to increase your tax refund. As long as you have this money, if you're in the 40,000 range, that's a lot of money to really increase your refund left on the table. This year, it's a little different with the new law changes. While everybody was watching the Russia situation, this is the laws that were passed. They took the individual exemption away, and now they just have the personal exemption. If you are married, it's $24,000. If you're head of household, it's $18,000. And if you're single, it's $12,000. They actually doubled the amount that they've taken from you immediately. This is before $1 is deducted from your taxes. Let me show you how that happens. Last year we had $29,600 in our taxable income. And I would say, hey, you only sent me $20,000 of expenses. I need you to send me $9,600 more. You have those expenses. Well, this year, if you're married, you can only send me $16,000.
Wow.
Every year, these laws are being passed to hurt you.
Wow.
And so it's more important than ever that you go in there, they're taking the money from you before you can even use it. And so it's very important they're doing this with law. This is already law. When you file your taxes, you'll see a big difference in your taxes this year, and this is why, especially for business owners. So it's very important that you go after all of your money. Here's the problem. Your expenses cannot exceed your taxable income according to the Internal Revenue Code. So what this means, this is how you trigger a red flag. If you send me $16,001, we just call it an audit. But Rodney, I made $40,000, and then last year I sent you $29,000 of expenses. Well, you can't send me $16,000 this year. And that's very gonna change your refund a whole lot. And I want you to understand these laws have already taken place. This is what I'm suggesting on your W-4, single and zero, for the at least 8 months. 8 months at single and zero and 4 months on whatever you choose. And it doesn't have to be consecutive. But you definitely need to make sure that you're paying yours. Now, I'm not suggesting you place yourself in any financial situation for a better refund. However, withholdings are the most guaranteed method to increase your tax refund. I want people to understand the simple formula is income tax refund. You must make income, you must pay taxes in order to get a refund. You cannot make income, pay no taxes, and expect a refund. That is not proper. And so once you understand that, this is a great strategy for you to go with your W-4, single and zero. I always suggest around holidays, birthdays, when you know you're gonna spend money, you wanna make sure you change it to whatever you want, and it doesn't have to be consecutive. But at least give me 8 good months on that single and zero, and you'll make sure that you don't owe. Here's a quick self-test to see if you left money on the table. On line 43, on page 2, where you find your refund amount, you'll see a taxable income. That line should be on zero. And I want you to understand, for our example, we had $29,600. As I write off your shoes, your phone, your car note, your water bill, as we use this to get this $29,000, your refund goes up. It's just that simple. We're gonna take the expenses that you already have existing, transition those into business expenses, and use that to raise your refund legally. Now, if you go home and this number is not on zero, then you've left money on the table. And so you need to make sure that you go back, don't throw your money away. Go back and check page 2 of your 1040 line 43 and make sure that you're not leaving money on the table. Check your taxable income. Because I want you to understand, if you owe the IRS, they would terrorize you in the mail with letters. They really will. But if they owe you, you won't receive one letter. There's no notification that they owe you. And so it's on you to go on there and find out if you have money left on the table. Credits and deductions, how are they different? Deductions are expenses associated with your business that qualify for the deduction. What that means is truckers and travel agents receive similar deductions, but they're not the same. And I want you to understand that. Each business is given a business code that determines the deductions. And so let's say you make $40,000, you're in a 15% bracket. That means you roughly owe the IRS $6,000. And let's say you're in Houston, we're only gonna use $1,000 of your gas. We know it's way more. What's gonna happen is they're gonna take that $1,000 from your AGI, give you a new AGI. And then they're gonna multiply it by your bracket. And as you can see, from $6,000, you went down to $5,800. And that's just using $1,000 of gas that you already paid for anyway. What if we used the $29,600 right here instead of just $1,000? That would make this $6,000 completely go away. And then maybe even add a couple of thousand on your refund. But what if, Rodney, I get about $1,800, I get about $2,000. Would it be okay to get $8,000? Legally? That would make a lot more sense. And so these are how deductions work in your favor and how we can really move your refund. But what are credits? Credits are tax breaks meant to stimulate the economy. What that means is they go and they come away. And so in the instance, 40,000, 15% bracket, and you got 6,000. Do you have light bulbs at home, ma'am? Specifically for? More. Now, did you know if you went to the store and got 4 of those energy efficient light bulbs that you qualify for a $1,000 credit?
Wow, I got 6 of them.
I think that light bulbs cost $26. Would you spend $26 for $1,000 legally? The question is, did you? You see, the reason I asked that because this one is gone. That was last year. And I always let people know this year is tankless water heaters, solar power type thing, and you may not have, but you may know somebody who does. And once you qualify for that credit, look at the credits. They come directly from your liability. So instead of owing $6,000, now you owe $5,000. I want you to see is you can see credits are more valuable, but these deductions are written in stone. They'll never change. So my goal is to teach you to revolve your life around these deductions, and every year you and I find credits that fit you. And so this is what you really want to do to maximize so you can see how credits and deductions can really move your refund. Now, a lot of us use the Schedule A and we used to itemize it. But I want people to understand that when you itemize, even worse this year, that it's like 3% of your money back. And when you use the Schedule C, using business deductions, it's like getting 60% of your money back. Which one is best? 60, right? But why not both? If you already qualify for a Schedule A deduction, then we're going to make sure we take advantage of it on the Schedule C deduction, especially when it comes to mortgage, interest, real estate. See, you already filed it on the Schedule A, but did you know that you can file it on the 8829 and attach it to your Schedule C, giving you a double deduction? And you can get them both. That's paying Chase $25,000 and getting a $50,000 deduction. That just makes sense if you already paid it anyway. And so these are the things that you really need to know. The IRS has 2 rules. I want y'all to understand. You either spend it or you give it to them. And so if you earn some money, what would you rather do, sir? But when you spend it, you have to spend it in the name of business. You can't spend it in the name of you, or else we can't write it off. Let me give you the law so you'll understand. And here's a fact. 80% of Congress owns a home-based business. They just finished having, if you watch your news, they just finished having a home-based business caucus. They just finished. So that means that they're writing laws for themselves. Did you know if you own a home-based business, they write laws for you too? I suggest you own a home-based business and take advantage of the laws being written for you right now. And so here are the laws. According to Congress, not Rodney, Any taxpayer who runs a legitimate home-based business, whether part-time, full-time, or spare time, because we all know somebody who doesn't have time for your business. So, you perfect for my business if you don't have time for it, according to Congress. You need to meet 2 requirements. Run the business on a regular and consistent basis, 3 to 4 hours a week. Do y'all realize it's 168 hours in a week?
Yep.
Could you dedicate 3 or 4 of those, just checking to make sure if you made some money? It's not difficult, according to Congress, to qualify. Or run the business with the intent to make a profit. Who doesn't intend to make a profit as a business owner? And so intent translates to proof and documentation in my industry. You must document it. I want you to know it's not real if it's not written. And so if you leave it in your mind, it's not proof and documentation. So your intent has to translate into written document. And so definitely want you to make sure. And this is why I believe the home-based business is the best tax strategy ever. Yes, sir.
Does that mean you basically gotta keep your receipts?
Well, I'm gonna teach you the future. The bank will keep the receipts. You don't keep them. Dinosaurs keep receipts.
You said bank.
The bank will keep them now. You just keep spending like you've been spending with your debit card, with your Apple Pay. And the bank will keep that. And at the end of the year, you hit spending reports and it'll separate all of those expenses into categories for you. That's the way to do it, but you need to have your business bank account set up first to do that. Because they don't do that on personal accounts. And so once we get your entity structured and set up correct, then you can have that advantage of the future. And then you just keep spending. It'll be a system now. We'll teach you how to spend properly. Meals and entertainment survived, y'all. That was one of the ones they took off the table. And meals and entertainment survived. However, it's a lot of rules that come with it. And so I want to give you a few of the to-dos that are required. Your meals and entertainment and realm of business should create a way for you to 1, generate business, 2, create goodwill, and 3, thank employees for a job well done. Who'll be your first employee?
Kids.
You, right? You, not even the kids. You, I'm on myself first. Can you thank yourself for a job well done? No, I mean send yourself somewhere exotic, not Houston. Send yourself to an exotic location and really thank yourself. We see these CEOs going R&Rs every day and we get mad. When you gonna send yourself on one, owner? You know that's your company, right?
Oh, yeah.
You know you can send yourself on the R&R if you feel like it and write it off in the name of what? Business. That's what I want you to think about. 2 tests they want you to pass, the directly related tests. Show the main purpose of the active expense was the conduct of business. 1, the nature of business transacted, and 2, the reason for conducting business. In English, that's a sign-in sheet. And see, that's why we all make sure we sign in so we can make sure that they know that we were here tonight to conduct business. And so anytime 4 people hear me, I ask real, sir, can you sign this? Can you sign? So I can make sure that anything I'm doing this evening is tax deductible in the name of business. And the associated test, showing the conduct is associated with your business. 1, that you show that you held a business discussion to get income or other benefit. I want to bring your attention to this. Business discussion. Did you realize you get paid to talk, sir? You see, the law says as long as you discuss, it is a deduction for you. Not Rodney. This is law. This is not my opinion. And 2, as long as you do it within 24 hours, it must be held in the same day. So you know what? Let's eat. Let's have fun. Let's enjoy ourselves. And we'll talk business later. I have 24 hours. And so we want you to understand how you structure your company is up to you, as long as you stay within the tenets of the law. We want you to understand it's all on your side. You saw my wife gave up here, gave a beautiful introduction. I want you to understand I'm gonna write her off as well. And see, a lot of times when you get involved, your spouse doesn't get involved with you until the money started rolling. And now it's y'all business. And so we want you to make sure that the spouse can clearly show for business purpose. So take these cards, pass them out, look alive, and we're going to write you off in everything we do in the name of business until we get the spouse involved. And see, that's what you want to make sure that you do as a business owner so that you don't have to leave your wife at home. You don't have to leave your spouse at home. You can bring your entire family every time you go. Here's the few rules. These are the new 2018 laws, and this is how they're doing it. Last year, we could do all of these things as business owners. We could entertain clients. We could get the meals. We could have a meal with a business partner, just me and Robert discussing this meeting. Now you get no deduction for those things. You'll get a 50% deduction if you do it while you're traveling away, meals while traveling to a location, employee meals and snacks for the office. I see we have a few over here. We'll get 50% deduction. But you want to get 100% deduction for anything you purchase in the name of a meal? Part of a meeting, Robert, 100% for tonight, everything you have. Food for the open party, holiday party, food as a cost of goods that's related to business, and meals as a part of the training or the marketing presentation. 100% of what he bought tonight is tax deductible in the name of business.
Super Bowl, that's a Super Bowl party.
Is that a business in your business? Is your business Super Bowl? If you work for the NFL, if you own the NFL, if that's your business, then yes. But if you don't own football, then no, sir. Super Bowl has nothing to do with
So I'm
it.
saying, like, if you do an event.
Look at this. It has to be your business.
Okay.
You see what I mean? You don't want the Super Bowl to be the theme. Your event is the theme. And we can watch Super Bowl while we're there. Remember, we got 24 hours. Let's eat, have fun, and we can talk business later. We got 24 hours. So stay within the 10 of the law, and I can show you how we can turn a Super Bowl party / meeting into a in the name of what? Business. Not in the name of you.
Yeah.
And so that's what we want to make sure we do. Look at the operational expenses. I want y'all to understand, 20 outfits and 20 pair of shoes are tax deductible for the business owner as a uniform. Can you go in your closet and find 20 outfits and 20 pair of shoes and say, yeah, this is a good uniform, and write it off in the name of business, or you just gonna go buy some new ones? And write it off in the name of business. It just makes sense. Whose phone is that, ma'am? No, you're not getting it. Oh, there you go. There you go. There you go. If I call you, you'll talk to me about business on that phone, right?
Right.
And so now that a portion of that cell phone bill is tax deductible. Because me and the IRS know that you open that account in your Social Security number. But did you know there's a free call you can make to switch this from your carrier to your EIN, and now I can go get 100% of that tax deduction? That's a free call. You just call Sprint, AT&T, whoever you're with, and say, I want to switch it out of my Social Security number into my business EIN. And now they're going to switch it over and make it a business line. They're going to offer you way more lines than you have. Just tell them I'm cool with the 2 I have, or how many you have. And then we can write 100% of your cell phone bill off in the name of what?
Business.
Not your phone if you switch it out your social. I want y'all to understand that EIN is free. It doesn't cost you $1. You just need to structure yourself right. Ladies, I want you to understand, you know when you go and get your hair done, you have to look good for your company? You realize that, right? Are you writing your hair? Are you writing it off?
No.
Because see, it's called a business image maintenance. You have to look good. So every time you get your hair done, make sure you spend from your business account so we don't keep receipts. Just don't use your personal card. Make sure you use your business card. And this is how we getting your nails done, massages, that's wellness. We want you to understand all of these things are tax deductible. Men, barbers don't like to give us receipts because they don't like to report their income. So I pull out my bag of receipts and make him sign my receipt, please. I want proof that I get a deduction for my haircut because I need to stay looking good for my business. And so my haircut is tax deductible. And I want you to understand, as soon as another person see that, they're going to ask you a few questions. How you get to do that? I'd like to share with you. Entertainment. You saw some of the entertainment can be a deduction. Make sure in your business that you tie business in more. You have the 24-hour rule in your favor. Make sure that you're taking advantage of that. Entertainment. What does Oprah do every year? Give away. Do you ever see her do it in the summer? No. January? When does she give away? December, every time. Not just her, a lot of rich people get philanthropy. You know why? Because they get to write it off. See, Oprah made $2.2 billion. When you make that much, you owe $247 million to the IRS. They're not friends with Oprah. They love Oprah when she comes. But when you owe $247 million, your shoes, your cell phone, your hair, that's not enough. It's not enough. You don't spend that much when you owe that much money. So what does Oprah do?
Give away cars.
Giving 200 houses away. I'm giving 200 cars away, not just cars, 200 of them. You see what I mean? I want you to understand, she give everybody an iPad. That's an $800 item. I want you to understand it because a non-professional professional will tell you that, Rodney, you only can write $25 off on a business gift. That's correct. But did you know marketing promotional items are 100% tax deductible? You think Oprah just get $25 when she give a house away? No, that's not a gift from me. That's a marketing promotional item that you'll do business with me. And so I'm gonna give you a house hoping that you leave it on the home channel, buy my cups, buy my magazines, make Oprah richer while she lower her tax liability. Did you write your Christmas off this year? See, this is what we're gonna do. We're gonna take your name off the gift and put your business card on the gift. And who is it from then? Business. Not from you. And that's what Rodney wants you to leave with. And we're gonna write Christmas off just like Oprah and the rest of the rich people. The most famous one is a guy from Houston. One of the oil guys, he gave 1,800 employees a $180,000 bonus.
I remember that.
Yeah, you remember that? Everybody say, oh, I want to go work for him. Let me show you what he did, because you don't realize what happened. These were $40,000 workers put into a $250,000 tax bracket. On 250, you owe 40,000 back to the IRS. So they went in to file their taxes and were told you owe 40,000. And everybody wanted to run and work for him. But mind you, that was a $4.4 billion tax deduction for the owner who profited $5 billion that year. And so when you earn that much and just gave it to his workers, change their lifestyle if they all put up 40,000 or spend in the name of what? Business. You see, I'm gonna go buy a truck for that 40,000 instead of giving it to you. I can go buy a truck off the showroom floor in the name of business, not in my name, in my company name, and we're gonna write it off that way instead of paying the IRS. Meals, we share it with the meals. Who is the one person you can talk to every time? Me. The waiter. You see, he's gonna come up to you. Can I help you? Yes, you can. Well, we know we have 24 hours. I'll talk to you in a little bit. Let me eat, let me enjoy myself, and I'll catch you on my way out. And so if I happen to have my daughters with me, guess what? Excuse me, wait, I need 2 checks. Because see, we can't market the kids, so put the kids on one check and put the adults on one check. And when it comes to the kids, you pay with your personal account. When it comes to adults, we pay in the name of what? Business. And make sure you talk to the waiter on your way out. Exchange some information. Remember, it's an activity of exchange. So how do you make your personal home your place of business? This is a good one. The IRS say you must have a bona fide business, meaning that that business part of your home must be exclusive, regular, and for your trade or business. Here's the funny part when I saw this law. The business part of your home must be one of the following. Your principal place of business. Check. This is my business. A place where you meet and deal with customers in the normal course of trade or business. Check. And then a separate structure you use in connection with your trade or business. In English, the biggest room in your home. See, I want you to understand we get tax advantage according to the square footage. So why would you pick the small room? Go to client's house and they, Rodney, let me show you my office. It's back here in the back. And they take me by the big rooms to a small little room. It's quiet, it's peaceful, but did you know the square foot advantage in your living room is beautiful? And we can take more advantage, it's more stuff. You have a couch at your home? I call it office furniture.
Amen.
Yeah, you see, you have a TV?
I do.
I call it a business monitor.
There we go.
And so we're gonna write those things off in the name of what?
Business.
But you bought it for your living room.
I'm writing the TV off.
See? I want you to understand, your home is not your home. Your home turns into your what? Corporate headquarters. This is where you do your accounting. This is where you do your deals and your networking and negotiations and your market analysis right here at your headquarters. But you thought it was your home. Let's recategorize the things that you own so you'll understand. I want you to look at some of the deductions that you can get when you just think about that you have at home. Gas, cable, internet, utilities, phone, furniture, even your cleaning supplies.
Wow.
Even your cleaning supplies, cause this building has janitors, correct?
Yes, sir.
So does my home. My daughters, great janitors. I
Uh,
pay them well. If you come to my house and you need to use the restroom, thank them, tip them, because they took care of it. But unlike most homes, you will really get a presentation in Rodney's living room on one of my businesses. When you gonna turn your living room and put the home back in home base? You see, that is a business. Home-based business is there. You need to put the business back in the home. Do some presentations in the living room and turn your bathroom into a tax-deductible event. I want you to understand, you may have brought some waters already at home. But now, they're tax-deductible because you turn your living room into a presentation. And so make sure that you're taking advantage of this. And I want you to know 33% of your groceries. My wife, as an accountant, she'll let you know a portion, anything beats a blank. If you wasn't taking advantage of these deductions before, you're definitely gonna take advantage of them now.
Yes, sir.
Here's the number one misdeduction in right now in taxes. I want you to look on the side of the road, especially in Houston, because this is what's happening. You are literally driving by thousands of dollars. And what's happening is because most people forget to document. I was just talking to a client yesterday, and he documents for his job, gets out his job card, and start writing for himself. How can you remember as an employee to write it for them so they get paid, but when you get the same deduction, you just stop? And so we have to shift that mentality because most people just forget. And this is what I want you to understand. Here's an acronym, MAP. And MAP is an acronym for marketing, advertising, and prospecting. Whenever you leave home, you need to be mapping. Every time you leave home, you need to be mapping. You going to the store? No. You going prospecting.
Hey.
You going to church? No. You going marketing.
Hey.
You going anywhere? No. You going advertising. You need to pick one of the reasons, because on your app that you use, that you're going to track, because you don't have to write it down anymore, just buy you a $3 app that'll track all of this stuff for you. Because I want you to understand the IRS don't want to talk to me or you. They just want to see the proof. They're going to send you a letter and me a letter and say, we'd like to have your client mail in their mileage log. And if you say, Rodney, I didn't track anything, you lose. And so, but if you have a $3 app, best $3 you ever spent. Go literally put $4,000 to $5,000 on your taxes from that one $3 purchase. And so we want you to make sure you understand and know that every time you leave home, it could potentially be for business. Because all you have to do is have a discussion, correct? That's what the law states, not driving. But did you know for 2019, last year was 54.5 cents. This year, 58 cents a mile.
Ooh, nice. Great.
Nice, that's better than nice. So that lets you know this trip to Houston was very profitable. And going back gonna be even more profitable. But we're gonna make a few stops before we go in the name of business and share things with a few. But I want you to understand, getting paid 58 cents to drive, that's almost $1, y'all.
Yes, sir.
That makes sense. And I would spend $3 to make sure that every time you go, you hit start. When you get home, when you get where you're going, you hit stop. When you leave, you hit start. When you get home, you hit stop. It's going to ask you, what was the business purpose? Map it out. Marketing, advertising, prospecting. Pick one. Just make sure you pick one. Here's how. Any of you W-2 employees? Every day you have to go to work, correct? At least 5. But I want you to understand, when you leave your corporate home location, I want to show you how to get paid for something you have to do every day anyway. You want to start your mileage tracking app as soon as you leave home. But you don't have time to advertise, so I want you to put your car signs on your sign. You know, Vistaprint will send you some magnets so you can advertise your business on your company vehicle for less than $50, and they'll be there in less than 2 weeks. What's the worst can happen? Somebody call you? And so the one thing you want to do is put the signs on your car. But what I want you to understand is that when you put those signs on your car, it's not your car anymore. It's your company vehicle. Right? It's your company vehicle. What's your car number? A month. Multiply that times 12, and you tell me it's that value.
Yeah.
Yes, ma'am.
I have a question. If we're so say that's our car note is now our business because we put it on the magnets on there. But everything's coming out of it's not connected to an EIN, it's connected to our social, and it's all coming out of our personal account because we didn't open a business account. Is it still right off?
Well, the
is
good
he still
thing
right off
about
of business?
the tax law is ignorance is an excuse for the tax law.
Oh, okay,
And so you only can use that position once though.
okay.
And so people always ask me, Rodney, when do we need to switch all of this stuff over and get the business account before you're audited? When will you be audited? We don't know, so I advise you do it tomorrow. DBA, $18 in Houston, Harris County. In all of the counties around here, it's less than $20. EIN, free. Business bank account, $100 to $250 to open, but remember, we want to pay all our bills from there anyway.
Right.
And so this is what we'll do to spending. It'll take about an hour and a half out your day. So why you don't have that information? Rodney does not like to hear excuses on that. I tell everybody when you audit it, you'll make sure you hurry up and go get that information. Because the first 3 questions they ask is where's the DBA, where's the EIN, and where these expenses incurred in the business account. As a resolution specialist, if I know that's the first 3 questions, and if you don't have them right, you lose, I want to prepare every client and every person I cross to win an audit immediately, at least with those 3 less than $50 pieces of information. And so this is why I encourage you. So for your answer, yes, you can still collect that. Once you get your credit cards, wherever you spend money. The only difference is next year, you'll be pulling this information from 1 source instead of 5. And when you get to doing that bookkeeping, you'll be very mad at yourself that you spent so many different places. Because tallying up that stuff for the year is tedious.
I know.
And it can get very tiring. But once you allow the technology to do what it does, you don't have to worry about it anymore. And so, yes ma'am, you're okay as long as you use the ignorance position 1 time.
Okay.
Market, you don't have time to stop, so you want to make sure that you stop somewhere close to your business, like across the street from it, close as possible. Because when you get there, you're prospecting, that's when you want to stop your mileage tracking out. I want you to understand, from home to your job is illegal. Rodney cannot write that off. That is illegal trip for you as an employee. But from home to the Starbucks across the street from your job is your regular route as a business owner. And how often do you take that, sir? Every day. I want to show you how to get paid 58 cents a mile for a trip that you have to take anyway. And then when you leave home, where are you going? Back to Starbucks. There you go. There you go. And I want them to be to the point to where, oh, here come Rodney. Here he comes. I'm talking about it. They don't know what you're doing. I'm finna hit start in a minute, sir. I just want to say hello so I can hit start so that camera see me. I'm working my business and I'm going to get paid all the way back home. Y'all have a good evening. You will or you won't. What's the worst can happen? They call you for some business. And so that's what you want to make sure you do. You get paid. Here's one of my favorite. Hire your kids. You see, I'm blessed to have 2 daughters. And so but you really have to know that they're not your kids anymore. Don't call them what they are. Contract. And see, that's what you want to understand. Once you put them on contract, they are contractors. And so usually in the parenting world, we have a list of what we call chores. But in the business world, we call those job descriptions and job duties. So if you take a list of your kids' chores and scratch chores off and put job description, do you know that's the same thing? You don't even realize it. We've been training our kids, but we just haven't been titling them correctly. And at the bottom, put 6,300, because ages 7 through 17 get up to a $6,300 deduction per child. That's walking up to a mother of 4 and saying, ma'am, you got a $25,000 deduction for a decision you made 7 years ago. Who get paid 7 years into the future but a mother? And so we want to show you how to make that allowed. Rule 1, you have to have a W-9 on file for the child. Free download, parents. Doesn't cost $1. Make sure you fill it out. Provide a 1099 for the income that you pay the child, and make sure you file it. You can get a pack of those for less than $5. And most places are filing for less than $1. And so, but we provide those services as well if you need to get a 1099. And so make sure you do that. And create a contract of services performed. Again, job description, what are you going to be doing? You're going to be answering the phone, sorting cards, helping me out, passing out pens, doing whatever you decide the job description is, and I will pay you $6,300, sign right here. And that's the contract. You're gonna bring your 1099 to your tax pro, and your child is gonna tear theirs up because they don't have to file taxes. And that's how you get your deduction. And that's $25,000 per child. But remember, parents, we already have to buy the uniforms. We already have to pay for the meals. What about the lessons and activities? How about you pay your baby first and they buy their own uniform? How about you pay them and they buy their own meals? How about you, right before my daughter pays for her karate, I pay her for her services and she pay for her own karate. How about you teach financial responsibility early and at the same time make sure that you keep some money that you have to spend anyway? These are the laws in your favor if you have kids. And so we want to make sure that you understand they're not your kids. They're contractors. When we take advantage of this. But look how the laws helped us this year. Did you know the child tax credit doubled parents? No longer for $1,000, now it's $2,000.
Yes.
So if you got 3 kids, your refund is $6,000 before we even hit a button.
We have 4.
We ain't put in nothing, so we had $8,000 before we even started. I can tell you it's gonna be a beautiful year for you. And why is this one better than a deduction? It's a what?
Credit.
That means it goes directly to your refund whether I hit any button. All I have to do is put your name in, and this $2,000 goes in if you have a child that qualifies. So y'all starting at $8,000 before we even hit go. And so that's a beautiful year coming up. Here's the thing you want to look for the most. Commingling is breaking the tax law. Are you guilty of it without even knowing it? And see, here's the beautiful thing. It's not hard to tell them I didn't know till I saw Rodney, which is the truth. It's not hard to tell the truth. It's not hard at all. And so here's 4 steps to prevent commingling that I suggest. You want to purchase a business. You want to get your DBA or assumed name. You want to get an EIN for that business. And you want to open a business account. Just that simple. That's how you stop commingling. This will make you audit proof if you take advantage of these 4 steps. Trinity of business. This is what I'm suggesting to everybody. Get your DBA first. The county courthouse, register the business. You must have that. Everybody runs and get the EIN. Why? Because it's free. DBA costs money. Step 2 is EIN. Do not have an EIN. Right now I got my EIN, but I don't have it because you haven't did step 1. Please do step 1 before you do step 2. And you go on irs.gov and get your EIN. Free. Doesn't cost anything. And then we want to take these 2 pieces of paper. The bank is going to require originals. Do not take copies to the bank and open your business bank account. This is what I call the Trinity of business. You want to make sure if you don't have those, you're wrong right now. And so we want to bring you back from step 5 to step 1 and go back and get your DBA. Yes, ma'am.
Can you skip the DBA and go straight to the LLC?
Well, when you do the LLC, you have to name your company.
Right,
You
right.
see, the DBA is naming your company with the city. And say when you signed up in your business, the only people knew you were in business was the company you signed up with and the IRS because your social is attached. But the city of Houston doesn't know you're in business. Harris County don't know you're in business. I can come down here, whatever the name of your company, I can take it to Dallas and open it up right now. Now, once you get an LLC, that's just a legal strategy. That just prevents you from being sued and your personal account being affected. And so you don't need a legal strategy before you even name your company. So you need to make sure that you name it with the city and the county. Then you can go up to the state, get a social security. An EIN is a 9-digit number, just like your social. And so anything you can do in your social, we can do in the EIN. Buy cars, buy apartments, buy houses, purchase assets. In the name of the company, not in the name of you. And we get a deduction for it. You saw if we just purchase your investments, all of y'all keep investing in, you don't get anything if you do it in your social. But if you purchase that in the name of the company, you can write the initial purchase off and get a deduction on the W-2 income that you earn it right now.
But do you need, I guess what I'm asking is, do you need the DBA if you have the LLC?
You can't have an LLC without a name of a company. DBA is an acronym for what?
Doing
Business
business
as.
What's the name of your company right now?
the G-Shop.
That's doing business as the G-Shop.
Well, I have the.
LLC is a
the
limited
company.
liability company.
So I have the G-Shop. I
You
have
know-
the LLC and then the DBA.
LLC is a legal strategy. You getting what I'm saying? One is a name and one is an attachment. that you put on just in case you get sued. Do people sue you in your business?
And, yes, they do.
I'm saying right now, do you feel like you about to be sued?
No,
So why do you have an LLC?
because I serve food.
Now, if you serve food, then definitely somebody could get sued.
Right, it's a liability.
But in your investing, remember, we're talking about investing. I want you to turn that into a business as well. Because right now, it's just you investing. And you capped at $3,000. So how about you take that same EIN you already have and go say G-Shop Investments. Now we got the investment company, DBA, another $18, that's all. And attach it to your EIN, which is free, you already have one, just a phone call. And go open up another bank account for your investment company. Now all this investment that y'all keep doing, we can write that off. Because right now y'all not getting no deductions for what you're doing. Because you're doing it in the name of you. And Rodney's saying doing it in the name of business. Yes, sir.
See, what if I made a big investment, but I didn't make no money off of it yet?
What do you capped at? 3,000. You spend 10 and lose 10, you only can write off 3.
So when I get my stuff for my the fall or whatever at the end of the year, what do I do?
When right now you just come see me and we'll look at your individual situation and tie it all in. Because you got other situations that's gonna make your business. But what I'm suggesting is that we go get an EIN.
I got that.
And you call the company that you're investing with right now and move it off your social and put it to your DBA and your EIN. And now when you make that big investment, I can write the big investment off too. Because right now, if you don't cash it out, it's nothing. You just purchase. Remember, the purchase in the whole is not even a report necessary. So y'all spend $10,000 and ride it for 2 years? That's long-term investing. But you spend $10,000 and cash, make $20 million and cash out. Then we gotta report it. And so we don't know. You know y'all market is volatile. It could go off. It's going up, 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 up. And a lot of people are afraid to cash out. So Rodney say, in a minute you need to have a cash out plan. And so we can write it off in the name of what? Business. Right now, this is what I'm saying. You have a personal account. So you'll have a good idea of what I mean. We have a DBA is what I'm suggesting get, and an EIN. And now we're gonna have a business account and a personal account. This is what you wanna do. Most accounts, most banks require $100 or better to open that. So, it's time to buy gas. Which card do you use?
Business.
Okay, it's time to buy, I got my kids out, we're going out to eat. Which card do I use?
Use the business for me and
There we go. There we go. Business for the grown-ups, personal for the kids. That's what you call keeping your money. You want to make sure. Now, here's the money phrase, $2,500 phrase. Owner's equity deposit. Right now, a lot of y'all are employees. And your employees, your W-2 paying job is really keeping your business afloat. You're just not getting any benefit for it. Yes,
can't
sir.
take out contractors out to eat.
Yeah.
That's a big key.
Wouldn't it be better to just pay them?
Yeah.
And they pay for themselves?
Yeah.
Learning how to take other contractors out to eat
Yeah.
and pass that on to your baby.
Yeah.
Because our parents didn't teach us.
Yeah.
You see, that's a better lesson. And you still gonna get the deduction.
Yeah.
But let them do it. Let them pay for themselves. Get used to paying for themselves. And get used to earning their own money. That's the better way instead of you just doing it. But sometimes you will just pay it off. I suggest it. Owner's equity deposit. This is how you keep your money. So if you move money from your personal account to your business account, that is illegal for an employee. But if you put owner's equity deposit in the memo section, whether it's online or if you go in the bank, that is now a legal move. Rodney suggests 60-40. That's what I
Can you read that one
suggest.
more time? Sorry.
I suggest, like on your W-2 paying job, let's say you get $1,000 this week on your W-2 job. I'm suggesting you take 60% of that, which is $600, and move it over to the business account. And where you gonna pay your bills from?
Business account.
That means you have to go, ladies and gentlemen, and detach TXU off of this. You have to take your water bill. You have to move all of those bills over to the business account. And now you can write and pay those things off from here. But the problem is, Rodney, my business ain't took off. I can't pay $5,000 worth of bills because the money over here. Well, move the 5,000 over here and write it off in the name of business. But you can only move that, and what that owner's equity deposit does, make that deposit tax free. Cause remember, employee, when you got paid, how many times did they tax you before you received it?
4 times.
At least. I know some get up to 12, literally. And so when you are already taxed, Rodney, did you know when you put money in this business account, you're taxing yourself at 35%? You taxing over here at 13 on your W-2, that's about 13 to 26%. But as soon as you put this money in here, you're now taxed at 35% immediately. No ifs, ands, or buts. Why would you double tax yourself? They already took it on your W-2 money. So don't let them take it again. If you put money in this business account, please put this phrase on there, because that makes that deposit tax free. If they already taxed you once. Now, if your business flat out earns it, and it hasn't been taxed, then deposit it in the business account, and we'll avoid it by writing things off.
So don't have our W-2 check go into our business account and then
No, that's
go to draw
illegal.
off.
Your business is not earning that W-2 income. You, as an employee, is earning that W-2 income. You let your W-2 income go to your personal account like you've been doing. And then you take 60% of that and put it in the business account, whatever the amount is.
And pay the bills for the.
And pay the bills and live your life in the name of business.
You as an employee of your business.
Well, if you have to do what Rodney did in S-Corp to do that, I get a W-2 from me. And so you have to S-Corp in order to do that, and that's another level of taxes.
That answers something.
And so you definitely want to make sure. But here's rule number 1, business owners. You must pay yourself first. You must pay yourself first. Owners do not receive 1099s. Please note, owners do not receive 1099s. I'll say it one more time. Owners do not receive 1099s. If you receive a 1099, please know you're a contractor of that company. You don't own it. And so make sure that your income is reported properly. But when you own the company and you start to receive income, there is no deduction for it. But you must pay yourself. So that's why you make sure you pull that owner's draw and pay yourself. But what do? What do we do when we pay ourselves? Owner's equity right back into the business account, right? So we can avoid the taxes. That's what you want to make sure you do. Because as you go forward and you start to earn in your company, and these banks and all of these different companies start to look at you, they're going to look at your finances, and that's one of the first questions they want to know. How do you separate yourself from your company? Oh, I just pay everything here. I don't want to know how you separate your bills. I want to know how you separate yourself from your company. And if you don't pay yourself, there's no separation. And they believe if your company go, you will go. And so you'll lose finance in that way. Best deduction of 2018, in my opinion, I still believe it. It's still winning right now. It's a game changer. The Section 199A, the new 20% deduction. A lot of people, this is earning $1 million and only being taxed on 800,000 of it. That's a free 200,000, y'all. And I just used $1 million so you can see the numbers, but it's whatever number you have. And so you want to make sure, as long as you operate as a sole proprietor, a partnership, or an S-Corp, one of those, and then you're taxed on 20% of your business income is free. Yes, ma'am.
I apologize, I think I missed something. When you were talking about paying yourself, not in the S-Corp, let's say you're a sole proprietor, you opened up your business account, I followed all the steps, I got my DBA, I got my EIN, I have my business account, I'm going to pay myself. How do I pay myself? I think I missed that.
You have to just, it's called an owner's draw. You
Okay.
just have to pull it out and say, I'm pulling 1,000.
I
Owner's draw.
pull it out from my business account.
Correct. And
And
on the
my-
memo section, you put owner's draw.
Owner's draw, okay.
That
And
lets
then-
it known that you are paying yourself and separating yourself from the company. And then what are you gonna turn around and do?
Deposit it back. Well,
As a what?
As a owner's equity deposit.
There we go, we learning tonight. That's what I like, we learning tonight.
So
That
can I-
strategy will make sure that if you ever go looking for financing, and when we start to build your business credit, and you start to get trades lines, we get you Dun and Bradstreet number, when you start to do those things, then you will start to see that that strategy was so important. Because underwriters and finances, they look at the fact that, are you separate from your company? If you're not separate from your company, you're not even existing in the business world. And so that's a strategy early that'll teach you about future business.
So do we still apply the 60-40 rule when we're depositing it back after
That's
we
what
get
I
our draw?
suggest.
Okay.
I suggest you do. And the reason being because if you do 100%, that's just a wash.
Okay.
And they'll consider that fraud. And so, yeah, keep 40% for yourself. Go do something. Spend it in the name of business, whatever you do. And make sure you take advantage of it. Here's the number one question.
Oh, I did have a question.
Yes, ma'am.
When you, back to your slide, the 20% slide that you said was a game changer.
Mm-hmm.
So if I have one of those set up at S Corp, a sole proprietorship, and what was, it was one more. It was an S Corp,
The partnership
the partnership, then I'm able to,
on your business income. And so what happens is once we apply that form, your business income, whatever you report. But again, this is on the profit.
okay.
After you use all your deductions, Queen, we're going to end up with a loss. This is for those who have too much in one company and have to lose in another company. Like on my tax firms, I can't avoid a profit. And so that deduction helps me so much on my tax firm. But my real estate, some of my investments, my travel, all of my different other companies, I can take losses on those. I don't have to take such a big loss anymore on these companies with that deduction.
Got it.
I can take a bigger profit in my travel now. And I want you to know, when you take a higher loss, a lower loss, they consider that a profit. A lot of people don't realize that. If you lost $20,000 this year and lose 10 the next year, that's a $10,000 profit to the IRS.
Wow.
And they'll look at that as a plus. And so if I can take less money off, attempting to avoid paying taxes, taking losses in all my other businesses, now that 20% deduction means I can claim a higher profit on all of those.
Okay.
And I don't have to worry about it, but you have to be one of those entities. And they have an unfavorable group. It's 7 different type of business entities that don't qualify. But that's a whole nother topic we have to get into. And so definitely give me a call and let's definitely get you a consultation on this.
Yes.
This is what I believe the best marketing plan is. The best tax strategy is your marketing plan. A lot of people don't know the best deduction is your marketing plan. Social media, word of mouth, referrals, business cards, flyers, phones, email, all of these different ways to market your business. Right now, I think I have 7 on here, or 8 or 9, but I want you to understand as a firm, Truth Induced, we market 77 different ways. So your marketing plan can really get extensive. My web goes 77 different ways. And so this is in 5 different states. So do you know the expense it costs to pay all of that stuff? And all of that is 100% tax deductible in the name of what? Business. So yeah, buy some clicks, buy some Google Pays, do a Facebook promotion, and write it off. Make sure you get constant contact. Yeah, you need that so you can make one email and send it to 1,000 people instead of making 1,000 emails. These are all the different forms of marketing that you can use as a business owner many years down the road and get a deduction for it right now. So your marketing plan, in my opinion, is the best one. Here's the business income flow. For those who are making money, this is what Rodney suggests. When you're making money, you want to take that income to the bank. When you go to the bank, we are putting that income where? Business account. If you cash out, make sure it goes to the business account, not your personal account. And we're going to do what? Pay self. I want you to make sure you get this step in. You have to pay yourself as a business owner. And then we want to make sure that we pay the taxes on. And I put pay debt first. I want you to understand debt and bills are not the same thing. I want to say that again. Debt and bills are not the same thing. Here's how you remember how they're different. Debt reports, bills don't. It's just that simple. Debt reports, bills don't. You pay the things that report on you first, and those things that don't next. Taxes, federal, state, city, payroll, whatever your tax structure is, make sure you pay that, and we send that to a federal deposit account quarterly, so that you have taxes already paid, business owner. And then you want to make sure after that, we spend on business expenses. This is when we pay our water bill, our light bill. Sir, those glasses, if I take those, can you see? So you telling me those glasses are part of your vision? You barely can see, right? You couldn't do your job properly, could you? So you need them to do your job. That's what you're telling me. The prescription and everything. So make sure you go get the newest lenses and write them off as part of your uniform, because you just told me you need it. And these are the business expenses. And I started out by letting you know the rich buy assets. You know why? Because of the liquidity value. Assets are counted as liquid money.
What's assets? What does that mean?
Whatever you go buy.
Something that's gonna bring in money.
This is not my Rolex. It belongs to the company. It is an asset. If you Google me, you'll see it as an asset of the company. It is not mine. I get to use it in presentations. I get to wear it. And it remains an asset of the company. But at any time, I can sell this Rolex for right now value. It will cash out at liquid money. It does not lose value anywhere in the world. Now, Hublot did, but not the Rolex. And so you need to make sure you grabbing assets, because that's liquid money. And that goes towards your value as a company. They look at your assets and they count everything you have. So when you spend, we rich thinking when we spend, because y'all said anybody can be rich. And those investments go right back to the bank. And then we spend on liabilities. That's what we transition those into what? Tax deductions in the name of what? Business. And this is the path that I believe you should follow when you earn money in the name of business.
So in addition to the.
Can we bring that back one more
One more
time?
time.
I need to take a picture of that too.
In addition to the business account, you
Yes,
saying
ma'am.
now the federal, what is the federal deposit
Federal
account?
deposit account, right?
Okay, so.
You need to call me for a business
It sounds
consultation.
like y'all we can all.
Now, yeah, you need a business consultation, because y'all won't be able to answer all those questions you got in your mind though right now.
Yeah.
I need one too.
Yeah, you definitely need to call me, and we need to take it back to step one. Before you call me, Google free business plan and complete a business plan. It'll be worth your money. And see, you can complete a free business plan before you call me. And then you'll have all your questions ready so that you can maximize your time. Here's a lot of business owners say the Internal Revenue Code say you can amend your taxes as many times needed to get the return correct. Right now, I had a business, I didn't get none of this. They didn't write none of my stuff off, no worries. We can go back 3 years and get all of the things that they missed. If they messed up, we can go back and fix it 500 times. And somebody can fix it after me. Yes, sir. Oh, you just hired?
We ain't been out of Texas in 3 years.
Well, good deal. I got software all the way back to 99, so you good. We can make sure we get it. If you haven't heard anything, please hear this. Documentation beats conversation every time when you're dealing with the IRS. They don't want to talk to me, they don't want to talk to you. They just want to see the proof. And so my goal tonight is make sure you understand how to get the proof for them. With that, I want to make sure y'all take a picture of this screen. Here goes 7 hidden deductions. I always like to start out with this one. You want to text tax truth, no space, to 42828. They'll each send your email, and they'll definitely get started with at least 7 deductions that you can start out with your questions. And so this is a great way. My whole goal is to motivate you to start looking. What I really suggest is you go to irs.gov, put business expenses in the search box, and you'll get 72 pages of information on what you can write off. Don't believe Rodney. Truth does not need any defense. Put business expenses in the search box on irs.gov, and you'll get pages upon pages of what you qualify for. And we can definitely make sure you take advantage. What is value? Value is what a product or service does for you, not what it does. And so to me, a home-based business turns any price. I don't care what you spend, sir. It turns it into a tax deduction. Any price. It turns any cost, because we understand price and cost are 2 different things. It turns any cost, what it costs to operate and maintain the business, into a tax deduction. It turns time. You see, once you have a home-based business, now your time needs to be monetized. Now you can start charging for your time. A home-based business turns your everyday expenses into tax deduction. So next time you say all of them when I ask that second question. A home-based business, in my favor, it turns your taxes into a tax deduction. Because who getting their taxes done? Not you. There you go, your business is getting the taxes done. So the tax preparation fee is even a tax deduction. So I want you to understand, and I fully agree that a home-based business is value to you. And so if you don't have a business this evening, make sure you turn yourself into a business and stop investing in the name of you. That's what I
You
want
don't
to
want
say.
y'all to go get
Oh,
your,
man.
I feel mine online, tax ID and stuff, I did it online, right there, took like 20 minutes.
Told you that.
I just went to got my DVA
No,
first.
you just got the information.
Yeah.
That's all. How long you had a business though? And see, that's what you want. Now go back to step one and Google business plan free and complete that business plan for me. And give me a call and let's go over. Questions. If you have a question, I have an answer. Yes, ma'am.
Never mind, what's your phone?
Everything is right here on the board. Everything is right here on the board. If you're on Facebook, make sure you go on facebook.com/taxtruth. I have about 15 years of information, plethora of information for you to go in there and see. And this has been going on, we've been on there since it's been open. And so you make sure you go on there, like our page. Make sure you like the page because I stay all year round putting information up there that you can really take advantage of. And definitely want to make sure that you tax truth those information. Questions, y'all, questions. I know y'all gonna leave and
What's
say,
the business?
I forgot. What happened?
How much you charge, man, for the business consultant?
Well, with the business console, we definitely look on our website, but
Okay.
just so you know, the business console, what I do, most business owners, just depends. Everybody here this evening, I'm gonna do 50% off, Robert, so make sure you give me a list of everything. But I normally charge
Thank you.
$175 for the first hour, and then $75 every 30 minutes after. But most people don't need more than an hour and a half for new business owners. And so definitely want to make sure that y'all call 175, hour and a half, and I'm gonna cut that in half for everybody tonight.
What you charge to do the taxes?
Our taxes have different fees, it just depends on what you're doing.
How you're
How many
filing.
forms you have. Business taxes have one flat fee of $600 with us, no matter how many businesses you have. And that comes out your refund, that's the good part, if you're receiving a refund. So Rodney's job is to get you 6,000 extra, take my 600 from it, and you leave with 5,400. And so that's what we've been doing for years, and the good news passes. I tell everybody, good news travels just as fast as bad news. And so the good news has reached you tonight. And so we just want you to make sure you take advantage of everything. But make sure you visit our site, watch the tax tips, visit our frequently asked questions. It'll answer all of those questions in black and white for you. And then make sure you start your client profile. And then I'll give you a call for your initial interview. And then we can make sure we answer and I can find out about your individual tax situation. Because it's just gonna be too hard to do in front of the room. But definitely, give us a call and we make sure we take care of you. That's what we want.
You work with vendors, like,
Well, I've been in business a while, and I also build business credit, not personal credit. And so when you build business credit, you have to deal with those individuals all the time. And so I have underwriters that use my company. I have real estate companies that use my company when it comes to taxes, and we answer their tax questions as far as how a lot of people structure with underwriters. That's why I have that knowledge of that. But I don't actually know them. I can say, hey, hook her up. I don't know them like that. But I do business with a few companies on the underwriting side. That's how we know. And I've set up business credit. And so that's how I know that information.
so if I was to purchase a home,
You
If
could
my
not show a
business
loss.
was
Underwriters don't like loss.
and I know that's the problem. I'm
If
having
they see a
right
loss
now.
on there, no, I can show you how to get the best of both worlds.
Yeah, cause.
I can show you how to get the best of both worlds.
You ready
Just
for the lights?
won't take but a little time, but you'll have the house and the future refund.
That's, okay.
Yeah, just give me a call.
Oh,
Good deal. I would cut the light. I ain't know this. All you need is the radio. Cut the radio on. Good deal. Any more questions before we get out of here, y'all? I know I don't want to have y'all all night. I appreciate your time this evening.
We appreciate you.
All right, Robert. You said.
Look here, if you didn't get the information you needed,
Inbox
inbox me,
That's
and I'll
okay.
get you his
I appreciate
information,
it.
and we'll get you set up with everything that you need. Have a great night.